Hey guys, this is going to be my Q1 recap as well as the trade that I went into today. So first we'll start off with the trade that we did. This trade we did not actually make a play on it. We were just planning out the trade. And today the reason why I want to talk about this trade a lot is because going into this, I saw a lot of bearish confluences with the bullish bias, which forced my bearish bias. So and it ended up being a bullish day today, and I want to get over why I really thought we were bearish on today. So first, we marked out our 1 hour draws on liquidity. Marked out this high right here. This high immediately got taken out by pre-market. Then we marked out this high. This high immediately got taken out by pre-market. So then the only other significant highs that we have to target are these low resistant 1 hour highs stacked up right here. So going into pre-market, the first thing that I saw that I really like to mark out was a fair value gap, because we know that this is on the 1 hour, this is on the 30-minute time frame. We also have one on the 1 hour time frame, right? So on the 1 hour time frame, we have a 1 hour fair value gap, and that to me is a really strong position. 1 hour fair value gaps, right? But one thing that I failed to realize is that we had the inverse of fair value gap, but we also have a fulfillment of equilibrium on the 1 hour time frame. I mean, as we can bring it up to there, we see that 1 hour equilibrium got filled. Now, in my mind, 1 hour equilibrium getting filled was only just confirmation for our bearish confluence to the downside, right? So we come into pre-market and we have an inversion of this gap. What I failed to realize on the inversion of this gap, this was solely due to news that came out early in the day. If we head over to Forex Factory, what do we see? We see a red and orange candle under 9 a.m. IMS PMI, right? So we come in, even though these are 8:30 candles, transitioning into 9:30, we still have major moves down. This is the lowest position that this candle had moved. So to me, this was just news coming in, and I had failed to realize that. That's a mistake on my end. That's a mistake that I made. So from there, I scroll down to the 15-minute time frame, and we made the inversion of the gap. But this yellow line that I like to mark out was an SMT divergence. The reason why I like to mark out that is because if we take a look over at ES, right, let's find out where that was. That was 5:15 to 9 o'clock. I'm pretty sure that was a 30-minute SMT divergence right here. 5 o'clock, 9 o'clock. Then we head over to ES. We find our 5 o'clock to 9 o'clock on the 30-minute time frame. Let's see here. Right there. If I can show you guys that. Right, and the way we gotta look at our SMT divergences are compared between two indexes at a time. So then we're gonna go over to NASDAQ and we're gonna mark out the same thing on NASDAQ. 5 a.m., 9 o'clock. Right, so if we compare the two charts together, we can see that ES is a lot closer to these lows than NASDAQ is. And because ES is SPY, ES is essentially the S&P 500, which is almost directly correlated to SPY, right? We can almost assume that, all right, because of this SMT divergence, we're going to change the trend. Now, in my eyes, I thought that since we had the inverse of our value gap, we're going to look for a change in trend and change in order flow as a reversal position to buy in, because we don't want to buy in down here, because we know this is where liquidity lies at this low, and we're almost going to get the liquidity sweep to the upside. So let's mark out everything else that happened into this. As well as during pre-market, we have another fair value gap right here. This fair value gap got inverse. We have no fair value gap stacked upon that. Let's go over to the 15-minute time frame. 15-minute time frame, there also isn't any other fair value gap, right? So to me, all right, I'm wondering, well, we have the inverse fair value gap to the downside. We have the bearish SMT, however, to the upside. We have inverse fair value gap to the upside, right? But as well as we could have had equilibrium in this position right here. And even when I scroll down to 5-minute time frame, we had a lot of 5-minute bearish, right? Because on 5-minute bearish, what do we have coming out of pre-market, and during pre-market when we formed the SMT and we started retracing higher, we have 5-minute for value gap right there that gets inversed. We have another SMT divergence coming down to this high to this high, and during this, market is just really up and down a lot throughout the day, and it's already 10 o'clock in New York. Sorry, it's already 9:50. So we were almost assuming that, all right, well, we might get a little bit later in the day, but we had a bunch of 5-minute high wicks up and down here, and then we had a retracement to the upside. So all in all today, I did not take this trade. However, I just really wanted to talk about this trade only because this was one of those trades that we don't have to take, right? Coming into it, I'm bearish on the day. Looking at draws on liquidity, we're looking to target. I'm looking at bullish draws on liquidity target. Looking at stuff like this, when we look at the inverse fair value gaps during pre-market, we got to understand pre-market is not market open. There's not new money flooding into the market, and well enough, if we were judging based off that conclusion, we're judging fully based off uh, transitions to bearish out of pre-market, we know that when market opens, we can look for high volatility just because new money's flooding into the market. So we come in and we're immediately getting really close to these highs, especially with this candle. And if you can tell that this essentially was just a market rush up during market open. That's new money coming into the market. We were always looking for a form of manipulation out of that. So to me, this was a trade I didn't take. Obviously, I will need more back testing on it, and I would like to I'll just leave it on the screen for you guys to look at. Maybe you guys can study something that I'm not seeing, help me out with it. But overall, I want to go into my Q1. So what is Q1? If you're a beginner and you don't know what Q1 is, Q1 essentially stands for quarter one. If we divide the months in a year, 12 months, 12 divided by 4 is 3. Yeah, I don't know why I had to double check that. Right, 12 divided by 4 is 3. So March, February, January, February, March, right? So essentially, my Q1 was very staggered, very structured. Going into January, not too many drastic changes in my win rate, loss rate. Actually, for January, we were kind of subtle. We stayed along even during January. It wasn't until February where I had a major breakthrough in the month. Going into February, it was a lot of wins. February was a really good month for me. I was able to close 4 digits on the month, which was really nice in a week, which was really nice. So I'm really able to get that. Unfortunately, this one in March, transitioning into March, the beginning of March was also very subtle until we get midway through. Midway through, we're starting to lose more money, but that's like every trader has. We have our good days, we have our bad days. But then transitioning into this week, I've started to learn more about the patient side of it. Trades like this where we're not 100% sure, we would rather take a trade when we're 100% than taking a trade fully based off risk and gamble. Because well enough, I could have bought in, I could have bought in bearish right. I could have bought in bullish right here. I could have got it stopped out. Right, I could have gotten stopped out all the way down here. I could have got in bullish during here. Could have got stopped in below that low. Right, so it's just these market conditions where we don't know what's going on. It's stuff like that where we don't want to trade. So what can you guys expect from me out of Q2, which I want to get into towards the end of this video? It's that Q2, I'm expecting a lot more during Q2. Q2 is going to be a really locked in month for me, really marked in that April, May, June. It's going to be really good. One thing I can promise you guys that you will see is that transitioning into June is definitely where we're going to get into prop firm trading. By then, I will have prop firms fully done and developed for you guys. We'll be able to talk fully integrated on how to set up prop firms, what are prop firms, and how prop firms fully benefit us. As well as we're looking to take more trades during the month of April. We're looking to trade more trades during the month of May. And during the month of June, you can look for the most trades out of me. So, all in all, I want to say that my Q1 personally was good. It was not bad. It was not great. It was very neutral. We had our wins. We had our losses. But obviously, we're bouncing back from that right now, gratefully. So I hope that going into transitioning into Q2, we can make a lot more profits. We can be a lot more profitable. And we can work together. And, we can obviously just perfect our strategy. Because at the end of the day, our strategy is not 100%. Our strategy is not 90%. Our strategy is not 80%. But I can guarantee you my strategy on what I believe is more than 65 is 75%, which to me is a good win rate. Having a 100% win rate is like saying, okay, if I make 100% of the shots I take, what's the point of taking the shots? We can always be better, right? So when you look at it in a broader scheme of things, trading is not just win rate. It's not just, all right, I'm going to win 100% of the trades I take. I'm going to get 100% of this. No, trading is essentially failing. To me, I had to fail the entire beginning of March. I had to fail after a good month in February just to be back to where I am now and sit here and just study charts for hours on end. So that's all I want to take in as well. I'm going to leave you guys with an important message. Just know we don't take trades all the time that we don't have to. When it's market conditions like this, we don't know what's going on. Don't take those trades. Please don't take those trades. Those are horrible to take. As well as trading is all psychology, guys. We're going into trading and we want to be 100% accurate, but realistically, we can't. not everyone's 100% accurate. You look at famous NBA players, they miss dunks, they miss layups, they miss their threes, right? No one's 100% accurate at this stuff. And when you get to accept that you're not 100% accurate is when you actually start making the most dramatic moves possible you can in the market. And at that point, you realize you are not a reflection of the charts, but the charts are a reflection of you, because you trade how you want to trade and you adapt to the form of money coming into the market. All right, that one was a good one, guys. But thank you for watching the video. I hope you guys really enjoyed. I wanted to talk over Q1, what you can expect in Q2, and the trade that I went over today. All peace and love. Thank you, guys.